So if you've been looking to buy a home anywhere recently, last 6 months, last 4 years, I don't have to tell you that it's difficult. It's changed drastically just since 2019, not just with home prices in Delaware specifically being up 36, even 40% in some areas on median, but also we know there's less homes on the market. There's less inventory to choose from, which is leading to multiple offers and sellers really backing down on taking normal considerations for offers as bonuses. So what we've been doing here since 2020, 2021 is readjusting our strategy as agents to get our clients' offers accepted. And we did that over 170 times last year. And what I'd like to do now is break down exactly what we're doing as agents so that either you can do it for yourself or you could advise your agent of trust on how you'd like it done, no matter what state you're in. Now, we are going to go through some Delaware specific things, and I'll make sure to let you know which are which when it comes to which can apply nationally versus just Delaware. But here's how it's going to break down. We're going to finish, I'll start on the backside. We're going to finish with the 5 things to avoid. Now, I'll tell you, the things I'm going to give you as bonuses and superchargers, great, but more people fall and don't get their offers accepted because of these 5 over here. I got 3 on top, 2 on the bottom. Sorry, it's confusing. Gonna start over here with some of the terms I would like for you to know about in the contract. If you've put in an offer before, if you've even bought a home before, you may want to skip over this, but this is the bare bones 101 of what you need to know about the offer. And then right here, this is the good stuff. This is what you're here for. The superchargers. We'll hit that right there in the middle of how to get your offer accepted the first time. And this isn't stuff you're going to find on Google, okay? This is stuff that we know as entrepreneurs, as agents, as whatever name you want to give us. We're on the ground, boots on the ground, working with clients, and we know what's working, what's not, mistakes to avoid, and what to know. Let's get started. We're going to start on this side with, like I said, the 101 of what you need to know as the buyer of a home when submitting a contract. Now, you can Google this and follow along, or we've even placed a link in the description for the agreement of sale for Delaware. If you'd like to review it, you'd like to follow along, feel free. But please do one thing. At some point, read the document. At some point, look it through, or get with an agent who's willing to do that with you. Something in this capacity doesn't have to necessarily happen, but just a brief overview of the contract you're about to be signing potentially to put an offer on a home. It's a big deal. And with that big deal is number 3. Number 3 are our financing terms. This is our purchase price. This is our deposit check. All right, this is basically the numbers involved in this offer. This is how much I'm willing to pay you for this home in this offer. This is the amount of deposit check that's going to be held by a third party that is going to be given back to me if something you do goes against the contract, or will be given to them if you as the buyer do something that's against the contract. That's where those 2 numbers are specified, and that's really the nuts and bolts of that simple section, but one you need to know about. Section 6 is similar, but a little different. See, this is our financing contingency. And if you look in the financing contingency, you're going to see 4 blanks, 4.5 really. Financing, and I'm just going to write C just to keep it short and simple. This is where we're going to be able to place how we're purchasing the property, like where are you getting the money? Getting it from a bank, getting it from mom's house, getting it from savings account. And are you then, with that, let's say mortgage, what type of mortgage are you going to get? VA for my veterans. USDA, rural. Are you getting a FHA? That's the first time out. There's so many different types of mortgages, and that's where that's going to be. And that's the mortgage that they're going to expect you to be getting and asking about throughout the transaction. And that's where that last blank comes in. It's your commitment date. And that's the time frame you have to go from I've been pre-approved with a bank for a mortgage to they're ready to give me the money. And we take care of that as agents, but you need to know that, and your loan officer needs to know that in the deal so that they understand when and what they are doing to get you your home in terms of financing. Number 20 through 22. Now, if you've bought a home before, this you might get a little bit extra on. The first 2 probably not, but hear me out on this. They are always promoting a world where we're getting so many offers. People are dropping their financing contingencies. People are buying sight unseen, and quite frankly, it's not as happening as rampantly as it was just 2 years ago, or maybe in some other states. In Delaware specifically, it's not nearly as dramatic. But that means for you, you should never be in a scenario where you have to walk into a home having not completed a proper inspection on a proper piece of the home. When I say a proper piece of the home, there may be a swimming pool. We need a swimming pool inspection. There may be a septic tank. We need a septic tank inspection, not just a overarching home inspection. What about wood destroying insects? What about radon? There's other inspections that can cover you or break you when you own that home, because you don't want to find something once you've already walked away from the closing table. So these inspections over here, huge. Because guess what, guys? And I put an exclamation point after it because it's important. Because once you walk away from that closing table, it's done. You can't walk back and say, hey, we found this issue with the pool, or hey, there's a settlement crack in the basement we didn't know about. Too late. Get it knocked out, put it in the initial offer, get your butt covered, and make sure section 20 through 22 is formatted the way you need and the inspections that you're going to need on that property are taken care of. Section 32, this is the additional terms and conditions. You may remember this as the little checkbox you got to check whenever you're downloading something. Hey, these are all the additional terms and conditions. You don't read them. I get it. But in our terms or additional terms, what we're going to say is this is like our creative section. It's blank. This blank section can have a lot of different fun stuff in it. Let's break it down into 3 easy ones. Closing cost assistance, we can ask for money. That's a great one. We can ask for a specific amount of inspections or a specific amount of repairs to be done. And we can also outline certain things we want in the property or don't want to be in the property. We could state a lot of different unique scenarios. So if you think your scenario is ultra unique and your offer is going to be very different, that's where section 32 is going to allow you the opportunity to bring that creativity to the table if need be. And that's the section on the contract you're going to want to look at before you throw that ink on it to make sure it's written in a manner that fits what you're looking to get, because so many people miswrite something, put a typo, and all of a sudden it changes the whole meaning of the contract, and that's not what we're looking for. We're looking to get the offer accepted. So with that being said, I want to break into some superchargers for the offer. Now, these initial blanks over here that we filled, those are the baselines of the contract that are really going to make the offer what it is. How much money, what are the terms, and then are there any additional things that we need to know about, like section 32. Outside of that, how can we make your offer stand out? Well, here at Loft, we have a few superchargers, and we have more, but I don't want to over-inundate. I don't want to overcomplicate. I want to keep it simple and give you the ones that are working the best. All right? So number 1 is rotating money back into your pocket. Your pocket. Not theirs pocket, not the bank's pocket, nobody's pocket, but yours. Now, how do you do that? Let's say you are offering on a $300,000 home, and you know somebody else is also offering on that $300,000 home. Let's say all things are the same. Similar purchase price, similar terms, similar inspections, similar closing dates. Let's say all that's the same. And the seller looks at both of them and sees that one is putting a little bit more money into their down payment. Cool. And they see on the other one, yours maybe, that instead of putting more money down, they're instead giving you a bigger deposit check, more skin in the game. Let's say this one over here is a $1,000 deposit check, while this one over here is a $8,000 deposit check. Ooh. As a homeowner, I've seen more sellers become swayed one way or another on similar offers by that deposit check, that skin in the game for you as the buyer, than really anything else, because that is telling the seller you're serious. That is giving the seller some kind of, option if something were to hit the fan and you said you didn't want to buy the home anymore for one reason or another. They don't lose out on all of it. And the big benefit to you as a buyer and me as your agent, I'm going to tell you in a fiduciary way. I'm going to treat you just like you're my client, okay? You ready? You're one of the savviest people out there and you're working with a savvy team, and what I'm going to tell you is you put money in that deposit check, your money is safe, because as long as you intend on buying this property, you don't intend on backing out for any reason that's inside your control. Because if it's outside of your control, you're going to get your money back. If you lose your job, if your job says you don't need to move there anymore, if you lose the money you were going to utilize, if somebody dies, there's a slew of things that can happen that could make that home no longer purchasable for you, and you're going to get your money back if that happens. That's the beautiful part of this, because you can put on the paper, hey, my skin's in the game, but then at the deposit check closing, you're going to get it back. That's right, the deposit check goes back to you. And you could still use it as money that goes into the equity of the home as a down payment. It could serve both purposes. This strategy works really well. If you didn't follow me on that 100%, it's okay. DM me, Zachary.Loft on Instagram. We can talk more. Repairs over a certain amount. This is another big one not a lot of people think about. You won't find it on Google. If you set in section 32 and say, hey, I want inspections done, don't get me wrong, and I may want repairs done, don't get me wrong, but I'm only gonna ask that you fix those repairs if the repair is worth more than fill in the blank. Let's say $1,000. Let's say anything worth more than $1,000 to fix that comes up on that inspection report, the seller is going to be responsible to fix. A number I like to toss around is $2,500 because that's stuff like the roof, the electric, the plumbing. We got to get mold remediation. We got to get grading done outside. These are big button topics, issues, windows, foundations. So we want to make sure we're not holding the bag at closing with these problems still existing. So putting something like this, repairs only over, let's say in this case, $2,500, worst five you've ever seen in your life. This scenario means that anything that's worth less than $2,500 individually on that inspection won't need to be taken care of. Doesn't mean you can't still back out of the contract because we still have that home inspection contingency. See, we got your back. But it does mean that the seller would have to fix a big issue if it popped up. I'm gonna come back over here. So with over 2,500 repairs being taken care of with a deposit check, it's a little thicker than maybe what it had to be to get some more attention from the seller. We also have a few other tools in our tool belt that are esoteric to specific scenarios. Don't go telling your agent, hey, this crazy guy on YouTube said to go do this. These are situationally based. And if you're working with me directly, I'm gonna tell you straight up, a lot of these aren't gonna apply to a lot of scenarios, but they could, and you need to know about the escalation clause. Meaning, same scenario, $300,000 offer, $300,000 offer. You could submit an escalation clause that says, hey, if my offer is competing, I'm willing to go up to this if need be. And let's say they also had an escalation clause that goes up to 310. Well, if yours goes to 312, you're gonna win. Even though both offers started at $300,000, if both had escalation clauses, whoever had the highest escalation clause, hey, go up to this if need be, it's almost like an eBay bidding war, you get the house. That's an escalation clause, and that's a scenario where you could go over asking, go over the appraisal mark, and that's where you want to get careful, and that's the next one I'm talking about, appraisal gaps. Again, take my word with caution, but you can offer to cover the difference between what you're offering and what it would appraise for. If the math's in your head, you may think to yourself, Zach, that doesn't sound like a good scenario. Why would I buy a home for over what it's worth? You're absolutely right, and you're down the right track in your brain. This is a very rare scenario where you gotta move. This is the house. This is the only one. It's gotta be now. It's gotta be this one for one reason or another. We need it, and it's competitive. The appraisal gap coverage, if you have cash on hand, is a tool that can be put in the old tool belt. Not one that I would use all the time, but when needed, can give you that extra sauce needed to get your offer accepted the first time. And let's talk about this little niche one way down here called the rent back. The rent back for my relocators out there is a scenario where maybe it's a longer transition, either for the sellers to get out of the property or for you to get into the property. And rent back scenarios where one person does actually take ownership of the home. In the scenario, your offer gets accepted and you buy the property. There could be a scenario where that seller doesn't have the ability to get all their stuff out right then and there. Or maybe they don't have the next home to actually get into quite yet. Well, you could always rent it back to them at the amount of your mortgage and allow them to stay there until need be, until you can move in. Again, niche-y, but if the scenario happens and that's the tool that needs to get utilized, you need an experienced agent who's done it, doesn't screw it up, and still presents the best scenario for you to get into that home when the seller's gone. Last one, 110%. Back to this view, 110% presentation, guys. I can't tell you how many times, multiple offers, and one of the offers that we receive, right? I'm talking about when we have the listing and we receive these offers. I can't tell you how many offers I get that are incomplete, missing signatures, don't have all the documents. If they do have all the documents, they're messy. There are many PDFs. It's all over the place. I have multiple offers I'm looking at. That makes it tough for me to disseminate and take the time to read over exactly what's given to me. Our agents have a cover letter, an email, one PDF doc that's sent over, easily presented to them with an email that documents it in bullet points. Here are all the variables of this offer that you need to know about. We can't wait to work with you. And we do have relationships with listing agents in the area, and we do happen to get our offers accepted the first time more often than most. And a lot of it has to do with these tools in the tool belt, these superchargers being utilized, the documents being fully known and fully disclosed to you, and then also presenting it in a clean, comfortable, communicative fashion too. We don't just email it over. We're calling, we're texting, we're hitting up the next day. When's our agent or when's our offer getting back? You got to have someone who's going 110% for you. That's a big deal for your agent of trust. Bigger deal, these 5 mistakes. Now, I said earlier, you heard it. I said these 5 mistakes make more issues than any of these other things make for bonuses, okay? I mean that. All of this stuff is beneficial. You knowing the contract a little bit to be able to throw a little knowledge around and understand you being represented well, great. You throwing in some superchargers, got some tools in your tool belt, get your offer accepted, that's awesome. But I'm telling you, you make one of these mistakes over here, all of that could be for null. It doesn't matter. You could still be screwed, you could still be out money, you could still be out of home, you could still have your offer denied consistently if you're making one of these mistakes. Now, let's start with number 1. The last thing you want is to say, look at this disclosure that the seller has put online called the seller's disclosure, that's our SD, and see this section called the inclusions and exclusions. This section is going to state what the seller is willing to sell with the home and what they're taking with them. That is not gospel. It does not equal the AOS, which is the agreement of sale, which is this document that we're talking about, the 32 section offer. It does not equal that, which means if they say, hey, we're taking the second fridge in the garage with us, doesn't mean they are. You can take it. You can ask at the very least. If there's, I've even had, there was an old car in the garage that they weren't planning to use anymore. They just happened to be in the garage. They said, hey, if we give you this offer, could we also get the Mustang in the garage? We had to write up a whole separate contract, but they got it. There's a lot of things you can do in this section, and they didn't say the Mustang comes with it in the seller's disclosure, but the agreement of sale did. They happened to say yes. So this is where you need to understand you could miss out on something and make a big mistake. A washer, a dryer, an appliance, a bathroom vent fan. So many different things that sellers are going to be taking with them. I guess the buyers forgot to read over that they weren't getting, or the agent lapsed on letting them know that they weren't getting. And that's a big mistake because no one wants to walk into a home without getting what they thought they were going to get. Number 2, we could do a whole video on new construction, and it'll be from this view. We could do a whole video on new construction, but to just touch on some of the key mistakes, I want to touch on 3. Number 1 is going new construction instead of looking at modern resale. Modern resale homes built in the last 5 years, sometimes in those same new construction neighborhoods. They're going to be cheaper. They're going to have usually better closing terms. You can get into the home a little bit quicker. And there's the benefit of it's already gone through the first few years of settlement. Possible repairs needed, possible mistakes made during the build, all been taken care of already. So you get the seller's disclosure from the seller and you know everything about that home. Plus you still have a lot of new stuff in it, so you're not going to have to repair a lot. So I think it's a great medium instead of going straight new construction for most. Now, if you are looking new construction, here's the second mistake that a lot of people make. They make a mistake around the timeline. They think they can move in 2 months, 3 months, or that they can do it without putting money down. And let me tell you right now, if you're looking for low money down options, it's not new construction, because you're going to probably put money down to start the process, and then more money down in the middle of the process, and then more money down to close the process. You also need to buy land. If it's undeveloped land, you may have to get plumbing, a driveway put in, electric pumped into that area. There's a slew of things. That's the other mistake people make. The third one that people make with new construction, let me tell you, it's a big one. They go unrepresented because they think that new construction company loves them. They may, but let me be very clear with you. The document we're talking about, this 32 section agreement of sale, doesn't exist in new construction. They use their own contracts. And remember how I mentioned that EMD, this financing section over here, and how this benefits you? Throw all that away with new construction. They don't care. Their contract is written for them. They keep that deposit check if you back out. They keep it in almost every scenario. And plus, they're going to throw things in there like impact fees and push you toward their lender and title company and give you bad representation. And I may catch some flack, but I'm being real because I represent our clients in a fiduciary manner. You're doing yourself a big mistake if you walk in there without an agent who's dealt with new construction companies before, because you will pay more, you will run into issues, and you won't have a home that is properly inspected throughout the process, because builders make mistakes too, that you're expecting. So get with an agent. At the very least, get some advice on who you should talk to builder-wise, because I can give you a list of builders in our area that you should and should not talk to. Hit me up. Number 3, I'm going to go ahead and fill in the blanks here, and this is a big one. Sight unseen. Do not do it. I'm going to put 6 lines through it. Don't do it. Don't. And you may think, Zach, I live in Germany. I live in New York. I'm coming down from Maine. I hear you. We work with so many relocation clients, and I'm a veteran myself, Army. I've been through, El Paso, Afghanistan, Florida, did the whole deal, And we have people that come up from Florida. We have people that come over from Texas, California, Colorado, Fort Sill, Oklahoma, all these places, upstate New York. And I'm telling you, sight unseen is so tempting because you're like, man, I'm only going to be in that area for 30 days before I got to start my job. Do I live on base? Do I rent? Do I live with family, a friend? It's tough. Here's some options. A, link with an agent of trust. FaceTime those showings, get videos, details. Not only go through FaceTime on there, but then ask that agent to, after the call, walk through meticulously on a 60 frames per second video at a half zoom frame so that it shows more on the camera, and have them walk through with that wide angle lens so that you could see everything on the home. Second one, have a friend, family member, or even spouse fly in, check the home out. Put in a due diligence period in the offer that, hey, even though we're getting this offer in today, in 13 days, we're going to be in state to walk through it personally, and this offer is subject to that walkthrough being satisfactory. There's other things you can do other than just saying, I want to buy it, never seen it. Don't do it. We won't allow it here, and if someone else allows it, I'd be curious as to why. Number 4, let's jump down here. Sorry, it gets a little confusing here, but number 4, big mistake. It's not letters of loft, L-O blank. It's letters of love. And these became increasingly more popular in this crazy market that we experienced last 3-4 years, where when there were multiple offers, some people would be writing letters, the buyers would, and submitting them to their agent to then submit to the other agent to basically say, we've been trying to buy a home for 12 months. We got 2 kids and a dog that died last year. Our Christmas stunk. We want the house. And none of that, first of all, is ethical. It's against the Fair Housing Act, and if your agent allows you to submit it, they are breaking the Fair Housing Act. And if they have an issue with that, they can contact me. I'll send them the document. And the Fair Housing Act is laid out straight in the agreement of sale. And it basically states this. You can't discriminate on anything but money or terms. So if you're looking at a letter and saying, oh my God, they're military, they have a kid, they have a dog, let's accept their offer, you're breaking the Fair Housing Act. And let me tell you right now, as a homeowner, you're not going to do that. You're going to look at your 3 offers and you're going to say, which one closes at the right time, gives us the most money, and has the best terms? Oh, their dog died last year. That stinks. All right, let's go with that one. That's what's going to happen. And I've been on that side of it too as the listing agent, where I have to tell my clients, and they don't need convincing, that this letter shouldn't be in consideration of why we accept an offer. And they always know that because it's common sense. But yet buyers still think it works. Agents still thinks it works. You'll see some random success story from it. Doesn't matter. It's unethical. It's a mistake. Number 5, big one. You may have read this earlier and thought, what's the big one going to be? I'm going to tell you that this is probably by far, out of all the mistakes listed and out of all the potential benefits that you can gain from knowing the documents to knowing what your superchargers are and how to get your offer accepted, the one big mistake you can make is if you're looking to buy a home in the next 6 to 12 months, not knowing where you're getting the money. And you may think, Zach, I'm getting a mortgage. I have VA. I'm good. That's great. But what happens when that perfect home hits the market? The property hits the scene, and you're like, man, that's the unicorn I've been waiting on. First off, if that's the unicorn you've been waiting on, it's probably the unicorn someone else has been waiting on. Food for thought. Second of all, now you come and see the property. You're like, this is it. This is great. Let's put in an offer. The agent is then going to say on the listing side, great, where's your proof of funds? And that is either A, a letter from your bank that says, I have a lot of money in the bank to cover this purchase, or I have a mortgage that is going to be given to me by this bank in this amount from this program, and here's proof. If you don't have either of those, that offer is not going in, and that property is going to go to somebody else. And I've seen this mistake been made time and time and time and time again. And let me tell you right now, it takes 15 minutes to know where you're at mortgage-wise. It literally takes texting this number. It may not come up on screen. 302-503-6647. That's my phone number. It's my personal cell. Call it. I'll answer. I'll say, hi, it's Zachary Faust at the Loft Team. I promise. Challenge me. And if you have questions about getting pre-approved, just text me. Pre-approval. I'll get you with a local guy who has a local program who has the ability to give you not only $10,000 in down payment assistance, but also understands everything we're talking about in order to empower you to getting your offer accepted the first time, getting you financially prepared to buy when you do want to buy. And like I said, even if the timeline's later down the road, 6 to 12 months next year, you want to get started in getting prepared. So that's my pitch. Hit us up if you want to get prepared. Not trying to get a sale out of you. I just want to prepare you, have you best set to get your offer accepted, because this is a market where many people aren't and many agents still don't know how to get them accepted. So if that's what you're looking to do, you're looking to place an offer here soon, so happy you watched this. Let us know in the comments if you gained something from it. We work so hard on these videos, so if you want to watch more, let the algorithm know by hitting like, by hitting subscribe, by tapping the bell, and leave a comment below on what maybe we missed or what maybe you learned about putting an offer on your first property, maybe in Delaware.